taxes. Just the mention of the word can send shivers down your spine. It's that time of the year when everyone seems to be in a frenzy, gathering documents, receipts, and forms. The stress is palpable, and the confusion is real. But why do taxes have to be so daunting? Why do they evoke such a strong reaction in us? Let's dive into the world of taxes and uncover the reasons behind this universal dread. Just hearing the word can make you want to run and hide. It's like a monster lurking in the shadows, waiting to pounce. The fear of making a mistake, the anxiety of owing money, and the sheer complexity of the forms can be overwhelming. It's no wonder that many people would rather avoid the topic altogether, but avoiding it doesn't make it go away. In fact, it can make things worse. So, let's face this monster head on and see if we can tame it. They seem complicated, confusing, and maybe even a little bit scary. The language used in tax forms can feel like a foreign language, full of jargon and technical terms that make no sense to the average person. The fear of the unknown can paralyze us, making it hard to even start the process. But what if we could break it down into simpler terms? What if we could make it more approachable and less intimidating? That's exactly what we're going to do. But hold on, understanding taxes is crucial, folks. It's not just about filling out forms and paying what you owe. It's about understanding your financial situation, knowing where your money goes and how it's used. It's about being informed and making smart decisions. When you understand taxes, you take control of your finances. You become empowered, and that can make a world of difference. It's about knowing where your money goes and how it's used. Taxes fund essential services like schools, hospitals, roads, and public safety. They help build and maintain the infrastructure that we rely on every day. When you pay your taxes, you're contributing to the greater good. You're helping to create a better society for everyone. Understanding this can change your perspective and make the process feel a little less painful. Plus, understanding the basics can actually save you money, and who doesn't love that? When you know the rules, you can take advantage of deductions, credits, and other benefits that can reduce your tax bill. You can plan better and make informed decisions that can lead to significant savings. It's like finding hidden treasure in a sea of paperwork. And who wouldn't want to uncover that? So let's demystify taxes together, shall we? Let's take this journey step by step, breaking down the complex into the simple, the confusing into the clear. We'll tackle the jargon, the forms, and the calculations. We'll make it understandable and even, dare I say, enjoyable. Because when you understand something, it loses its power to intimidate you. And that's our goal. We'll break it down into bite-sized pieces, no jargon, no headaches, promise. By the end of this journey, you'll feel more confident, more informed, and more in control. You'll see that taxes aren't the monster you thought they were. They're just a part of life, and with the right knowledge, you can handle them with ease. So, let's get started and conquer this together. In the simplest terms, taxes are money we pay to the government. Think of it like a membership fee for living in a country. This money funds essential services like roads, schools, parks, and yes, even those politicians we love to complain about. Without taxes, our society wouldn't function. So while nobody enjoys paying them, they're pretty essential. Now let's talk about tax brackets. Understanding tax brackets is crucial for managing your finances effectively. They determine how much tax you owe based on your income. The concept might seem daunting at first, but once you break it down, it becomes much clearer. These are like income categories with different tax rates. Each bracket corresponds to a range of income levels, and each range is taxed at a specific rate. This system is designed to ensure that those who earn more pay a higher percentage of their income in taxes, which is a fundamental principle of progressive taxation. The more you earn, the higher the tax bracket you might fall into. For instance, if your income increases, you might move from a lower tax bracket to a higher one. This means that the additional income you earn will be taxed at a higher rate. However, it's important to note that not all your income is taxed at this higher rate. But here's the catch. You only pay the higher rate on the income within that specific bracket. This means that your income is divided into chunks, and each chunk is taxed at the rate for its bracket. This system ensures that your entire income isn't taxed at the highest rate, which can significantly reduce your overall tax burden. For example, let's say there's a bracket for income between $30,000 and $50,000 with a 20% tax rate. If you earn $40,000, you only pay 20% on the $10,000 that falls within that bracket, not on your entire income. The first $30,000 would be taxed at the rate of the lower bracket. This way, the tax system ensures fairness and proportionality. It prevents a situation where a small increase in income results in a disproportionately large increase in taxes. Understanding this can help you plan your finances better, especially if you're considering a raise or a new job. Knowing how much of your additional income will go to taxes can help you make more informed decisions. It's also worth noting that tax brackets can change from year to year based on inflation and changes in tax laws. Staying informed about these changes can help you stay ahead in your financial planning. Consulting with a tax professional or financial advisor can provide personalized advice tailored to your specific situation. In summary, tax brackets are a way to ensure that taxes are fair and based on the ability to pay. By understanding how they work, you can better navigate your financial landscape and make decisions that benefit your financial health. So, the next time you hear about tax brackets, you'll know exactly what they mean and how they impact you. Deductions are like magic tricks that can lower your taxable income. They're expenses you can subtract before calculating your taxes. Common deductions include student loan interest, mortgage interest, and charitable donations. So, if you have a taxable income of $50,000 and qualify for $10,000 in deductions, you'll only be taxed on $40,000. Pretty neat, right? Section 5. Credits. Even better than deductions. Tax credits are like finding a $100 bill on the sidewalk, pure joy. They directly reduce the amount of tax you owe, dollar for dollar. Some credits, like the Earned Income Tax Credit, are refundable, meaning you could get money back even if you don't owe any taxes. Examples of tax credits include the Child Tax Credit and credits for education expenses. Section 6. Why this matters. Keeping more of your hard-earned cash. Understanding tax brackets, deductions, and credits is like having a superpower during tax season. It empowers you to make informed financial decisions throughout the year, not just when you're staring down the barrel of a tax deadline. By knowing your options, you can potentially lower your tax bill and keep more money in your pocket. And who wouldn't want that? Section 7. Real-life examples, because we love stories. Let's say Sarah, a recent graduate, is struggling with student loan debt. Like many young adults, she is overwhelmed by the financial burden that comes with higher education. The stress of managing her finances while trying to start her career is immense. She often finds herself wondering how she will ever get ahead. But Sarah is determined to take control of her financial future. She starts researching ways to manage her debt more effectively and comes across the student loan interest deduction. Knowing about the student loan interest deduction, she keeps track of her payments throughout the year. She meticulously records every payment she makes, ensuring she has all the necessary documentation when tax season arrives. This small but significant step helps her feel more in control of her finances. She learns that by deducting the interest paid on her student loans, she can reduce her taxable income, which in turn lowers her overall tax bill. This discovery is a game changer for Sarah. This helps her reduce her taxable income and save some money. With the extra savings, Sarah can start building an emergency fund, something she never thought possible before. She feels a sense of relief and accomplishment as she watches her savings grow. This newfound financial stability allows her to focus more on her career and personal growth, rather than constantly worrying about her debt. Sarah's story is a testament to the power of financial literacy and the impact it can have on one's life. John and Mary, parents of 2 young children, claim the child tax credit. Like many families, they are always looking for ways to stretch their budget and provide the best for their children. The child tax credit offers them a significant financial boost, helping to ease the burden of everyday expenses. They learn about this credit through a financial advisor who explains how it can lower their tax bill and provide them with extra funds to invest in their family's future, which lowers their tax bill significantly. With the additional funds, John and Mary can afford to enroll their children in extracurricular activities, purchase educational materials, and even save for future college expenses. The child tax credit not only provides immediate financial relief, but also allows them to plan for long-term goals. They feel more secure knowing they have a financial cushion to fall back on, and this peace of mind translates into a happier, more stable home environment. This extra money allows them to invest in their children's education. They start a college savings plan, knowing that every little bit helps when it comes to future tuition costs. They also invest in educational experiences, such as museum visits and science camps, that enrich their children's lives and spark a love of learning. John and Mary are proactive in seeking out financial opportunities that benefit their family, and their efforts pay off in the form of a brighter future for their children. These are just 2 examples of how understanding basic tax concepts can make a real difference. Financial literacy empowers individuals and families to make informed decisions that positively impact their lives. Whether it's managing student loan debt or maximizing tax credits, the knowledge of these financial tools can lead to greater financial stability and peace of mind. By sharing these stories, we hope to inspire others to take control of their finances and explore the resources available to them. Because at the end of the day, we all love stories of success and empowerment, Section 8. Don't be afraid, get help. Taxes can seem daunting, but there's no shame in asking for help. The IRS website offers a wealth of information, and there are numerous free tax preparation services available for those who qualify. You can also consult with a tax professional who can guide you through the process and ensure you're taking advantage of all applicable deductions and credits. Section 9. Conclusion. You got this. Congratulations, you've just taken a crash course in Taxes 101. Remember, understanding the basics is crucial for your financial well-being. Don't let taxes intimidate you. With a little knowledge and effort, you can navigate the tax system with confidence and keep more of your hard-earned money where it belongs, in your pocket. Now go forth and conquer those taxes.